Warren Buffett's company, Berkshire Hathaway, reported a loss of nearly $50 billion in the first quarter as the pandemic takes its toll on the economy. The company announced it lost $49.7 billion, or more than $30,000 per Class A share in the first 3 months of this year. That's down from a profit of nearly $22 billion in the same period last year. Berkshire owns more than 90 companies, including the BNSF Railroad and insurance. Billionaire investor Warren Buffett held the conglomerate company's annual shareholder meeting on Saturday virtually. And though many businesses have taken a hit in the first quarter, Buffett believes the U.S. economy will eventually recover from the coronavirus outbreak. For more on this, let's bring in Stephen Gandel. He is a CBS News MoneyWatch senior reporter. Welcome, Stephen. Great to have you with us.
Thanks for having me on.
So first off, what kind of impact could Berkshire Hathaway losses have on the overall economy?
Well, so the losses there, while enormous, $50 billion, almost $700 million a day during the first 3 months of the year, most of those losses come from, remember, Berkshire Hathaway is an insurance conglomerate. So most of those losses come from the investing side of the business. The operating side of the business, that was more a mixed bag and kind of a window into what this economy is going to be, right? So the BNSF, as you talked about, railroad that Berkshire owns, they had a 10% drop in consumer goods and coal shipping, but they had an increase in agriculture. The retailers Buffett has, those saw drops, but Duracell batteries, that had an increase in sales. So it's a shifting. And the other thing to note is this is the picture through March. It likely got worse in April.
Right. Yeah, I want to sort of dig into that a little bit because in the past, Warren Buffett has always found things to buy when there's a big downturn like this. And even at the meeting, he says nothing can stop America, not even the coronavirus. So he's clearly still optimistic. But why isn't he buying like he usually does during a downturn?
Well, he's certainly in his statement about the future of America, he's certainly relying on history. And he said in a number of different events, the Civil War, World War II, the most recent Great Recession we had about a decade ago, we've snapped back from that. And so there was a lot of questions from shareholders saying that you're the guy who buys when there's blood in the streets. You're the guy who's greedy when others are fearful. So why aren't you buying? And he said, essentially he's known as the Oracle of Omaha. His crystal ball is even cloudier than usual. That he was optimistic, but a lot of people, commentators who listened, they said his optimism was not as optimistic as in the past. And so he said the future for him looks a little cloudy, and so he's not willing to jump in like he has in past crises.
Right. And as you said earlier, Berkshire Hathaway is actually in good shape overall. I mean, he's sitting on $137 billion in cash. And didn't revenue actually grow by 1%? I mean, a tiny amount, but at least it grew.
Yes, revenue grew. But remember, again, this is through March. Things probably got worse. They had two good months there to rely on. Yes, he's got $130 billion in cash. And that was something that someone asked. Again, why aren't you buying? Well, he said, given all the uncertainty, with the worst case scenario, we might need that $130 billion in cash. And that's not a super optimistic statement.
Yeah, I was going to say, what does that say to you? Because of all people, the Oracle of Omaha has always bet on the stock market. And the fact that he's keeping so much cash on hand, does that say to the sort of average armchair investor, you should probably have some cash on hand too? Don't put everything in the market right now?
So Buffett often talks about how to manage risk, and he says that a lot of investors get it wrong. Liquidity is the real risk. So if it's money that you need, it shouldn't be in the stock market. And so I guess that's what he's saying with his own company, right? This is $130 billion. We might need it right now. So we're not going to put it to use. So that would be the same thing. But Buffett said, if your investment horizon is 10 years and 20 years, and he said with a laugh, he said, any investments we make now, I think are going to be higher in 20 years from now. Whether I'll see it or not is another thing. But he said that if your time horizon is 10, 20 years, you shouldn't be worried right now. If your time horizon is 6 months or 2 years, then you should be worried. That money shouldn't be in the stock market.
Right. It's interesting. He did note specifically something about the airline industry. He said, look, I made a mistake about airlines. That industry has changed. He sold all of his airline stock. He says, I wish that industry well, but it's no longer an investment I want to make.
That's right. Buffett made the note that, yes, the economy will bounce back, but it might be different than what we had in the past. And he said that no matter what happens, the airline business is going to be different. They're going to have more debt. People are going to travel differently. And so he said, I don't know what that future is going to be like, so I don't want to be part of it. And he said that for his own companies. Yeah, the economy is going to come back, but there's certain things, lost sales that are never going to come back. He owns See's Candies. They made a lot of candies for Easter. Those candies are never going to sell. And, surprisingly, he said some of his companies, he owns a lot of companies, and some of the smaller ones may not make it through this.
All right. Well, Stephen Gandel, thank you so much for joining us and sharing your economic insight with us.
Thank you.